Every empire believes it is permanent. Every currency believes it is unbreakable. History has never once agreed. Governments build systems to protect power. But somewhere, always, one man is studying the cracks they cannot see. On September 16, 1992, Britain learned the most expensive lesson in modern financial history in a single day. This is not just a story about money. It is a story about pride, denial, and the moment reality refused to be ignored. In 1979, Europe's leaders had a dream: unite the continent's currencies. Stability through cooperation. The ERM was born. The exchange rate mechanism forced member nations to keep their currencies within fixed bands. Discipline was mandatory. Britain joined in 1990. The pound was locked at 2.95 Deutschmarks. It felt like a promise. It became a prison. Germany reunified. Its economy overheated. To cool it, Germany raised interest rates, crushing its ERM partners. Britain's economy was weak. High rates were poison, but leaving the ERM meant humiliation. So they stayed and suffered. Meanwhile, in a quiet office, a fund manager was reading the same data as every government economist, but seeing something different. He saw a currency artificially held above its true value. He saw a government too proud to admit the truth. He saw opportunity. His name was George Soros, and he began quietly borrowing billions of pounds, planning to sell them all at once. What happened next was not a crime. It was not an accident. It was a man with a thesis, patience, and absolute conviction. The lessons of Black Wednesday are not about one man's greed. They are about the dangers of living inside a comfortable lie. Law 1. Never confuse official confidence with actual strength. Governments speak loudest when they are most afraid. In the weeks before collapse, British officials gave press conference after press conference. The pound would hold. It did not. When power insists loudly that all is well, that is your signal to quietly verify everything yourself. Trust data, not declarations. Law 2. Artificial prices always return to their true value. Always. The only variable is timing and the violence of the correction. The pound was not worth 2.95 marks. Everyone knew it. The market knew it. Only the government refused to accept it. Whether it is a stock, a property, or a currency, when price divorces from reality, the reunion is never gentle. Prepare accordingly. Law 3. Pride is the most expensive luxury a government or an investor can ever afford. It has bankrupted both. Britain could have devalued quietly in early 1992. The cost would have been embarrassment. Instead, they waited. The cost became billions. In your own finances, pride looks different. It is the bad investment you refuse to exit, the loss you refuse to admit. Cut it. Law 4. Leverage is a weapon. In the right hands, it builds empires. In the wrong hands, it destroys them with equal efficiency. Soros did not use his own money. He borrowed over 10 billion pounds and used that borrowed weight to break the system. He was right about the direction, and he had enough leverage to force the outcome before the market moved naturally. Timing met size. For the ordinary investor, leverage without conviction is suicide. Never borrow to speculate unless you can survive being completely wrong. Law 5. When a system requires constant defending, it is already broken. Healthy systems do not need daily reassurance. On Black Wednesday, Britain raised interest rates to 10%, then 12%, then 15% in a single day, desperately defending the pound. Each rate hike was an admission of panic. The market smelled blood. Soros accelerated. By evening, Britain had no choice but to surrender. In your own portfolio, watch for investments that constantly need justifying. If you find yourself always explaining why, exit. Law 6. The crowd's certainty is your warning signal. When everyone agrees a thing is safe, that is precisely when it is most dangerous. In 1992, the entire financial world believed ERM was untouchable. Institutions, analysts, governments all agreed. All were wrong. Consensus is comfortable, but markets do not reward comfort. They reward those who quietly question what everyone else blindly accepts. Before every major collapse in history, the dominant feeling was not fear, it was certainty. Remember that in your next confident moment. Law 7. Institutions protect themselves first, always. When crisis comes, the individual investor is never first in line for rescue. While ordinary Britons faced 15% mortgage rates that September day, the Bank of England spent billions trying to save a broken system. The money spent defending the pound that day, over £3 billion, was public money. The losses were shared, the lessons were not. Build your financial fortress independently. Governments change priorities. Central banks change mandates. Your discipline must never change. Law 8. Crisis always has a beneficiary. When wealth is destroyed on one side, it does not vanish. It transfers to the prepared. Soros made $1 billion on Black Wednesday, not from nothing, from the miscalculation, pride, and denial of an entire government. He did not celebrate publicly. He simply understood what others refused to see and positioned himself before the inevitable arrived. The question is never whether crisis will come. It always comes. The question is whether you are the one holding the position or fleeing it. Law 9. Fixed systems in a changing world are not stability, they are a countdown. Nothing artificial survives contact with reality forever. The ERM was designed for a stable world. When Germany reunified and economic conditions shifted violently, the system had no flexibility. Rigid financial plans faced the same fate. Build portfolios that bend. Diversified, liquid, adaptable. Rigidity in finance is fragility. Law 10. The exit always costs less than the denial. Every day you delay acknowledging a mistake compounds the final price you will pay. Britain spent £6 billion in a single day defending a position it ultimately abandoned anyway. The exit was always available. Pride blocked it. In markets, in business, in life, the moment you know something is wrong is the moment to act. Not tomorrow, not after one more quarter. Law 11. Interconnected systems share both strength and collapse. When one pillar falls, do not assume the others will hold. The ERM crisis did not stop at Britain. Italy was forced out the same day. Spain, Portugal, the contagion spread silently across borders. Never concentrate your wealth inside one system, one country, one currency. Diversification is not timidity, it is architectural wisdom. The investor who held assets across multiple currencies and geographies in September 1992 did not merely survive, they quietly prospered. Law 12. Information asymmetry is the oldest edge in finance. Those who read primary sources beat those who wait for the headlines. Soros read the same public data available to every economist, but he read it without the bias of institutional loyalty or political pressure. He asked the question no government economist was permitted to ask: what if the numbers simply do not work? Then he followed the answer. Develop the discipline to read original sources, central bank reports, trade data, fiscal statements. The edge is always in the primary document. Law 13. Political will is not economic law. Governments can delay the inevitable with willpower. They cannot cancel it permanently. For 2 years, Britain held the line through sheer political determination. Every month of delay was borrowed time and borrowed cost. When evaluating any investment, ask, is this performing because of genuine value or because of artificial support? One is permanent, one is not. Law 14. Reputation is built in decades. It is destroyed in hours. Black Wednesday ended careers, toppled a government, and rewrote history. The Conservative Party had built its entire identity on economic competence. One September afternoon dissolved 20 years of political credibility. In business and investing, guard your financial reputation with the same ferocity you guard your capital. Both take lifetimes to rebuild. Law 15. After every great crisis comes unexpected opportunity. The wreckage always contains the seeds of the next generation of wealth. After Black Wednesday, Britain left the ERM. Interest rates fell. The economy recovered faster than anyone predicted. Crisis became catalyst. The 1990s British economic boom that followed was built directly on the ashes of that humiliation. Destruction and renewal are always paired. Train yourself to move toward crisis rather than flee it, not recklessly, but with preparation. The prepared investor finds bargains in panic. Law 16. The most dangerous assumption in finance is that the current system is permanent. No system in history has ever been permanent. Bretton Woods fell. The gold standard ended. The ERM collapsed. The euro itself has faced existential crisis. Systems rise and systems fall. Hold assets that survive system changes, real assets, productive land, businesses with pricing power, hard commodities, and multiple currencies. Every law we have discussed tonight was written not in textbooks, but in the financial wreckage of real people, real governments, real consequences. Black Wednesday was not an anomaly. It was a mirror. It reflected every universal truth about power, pride, and the immovable laws of money. The man who broke the Bank of England did not possess supernatural intelligence. He possessed something rarer, the courage to trust his own analysis. That courage is available to every investor willing to do the work, to read deeply, think independently, and act before the crowd confirms it. Wealth preservation is not about finding the perfect system. It is about understanding that no system is perfect and building accordingly. Diversify across systems, question consensus, exit pride before it exits your capital. These are not strategies, they are survival instincts. The generation that understands crisis is the generation that builds lasting wealth, not through luck, through studied, deliberate preparation. You now carry 16 laws forged in one of history's greatest financial battles. They cost Britain billions. They cost you only your attention. The next Black Wednesday is already forming somewhere in some currency, some market, some system held together by pride and political will. The only question that remains, when it arrives, will you be the one who saw it coming or the one who trusted that this time was different?